Hey everyone, Safi Russell from SDR Consulting here. Happy year end. It's that time of year heading into the holiday season of 2020. And I just wanted to come out and talk about a few things in this article I'm posting about year end business strategies. The main thing I want to talk about is your structure. So now that 2020 is coming to an end, depending on how your year went, if you were pretty profitable this year and you're currently maybe just a sole proprietor doing business in your own name or your individual LLC or even a partnership, we need to consider if that structure is best for you in terms of self-employment taxes based on where you live and also based on your other income and deductions personally. An S corporation structure potentially could save you on self-employment taxes, and it also can help you to pay in taxes more regularly throughout the year because you now be an employee of your company. So in terms of structuring, those are some of the things that I like to look at with clients, especially if they're at the $20,000, $30,000 profit mark and up. Also, year-end retirement planning, can't forget about that. When you're in business for yourself, there are some higher deductions that you can take for retirement with a SEP IRA or even a solo 401k. Some of those changes need to be put in place before year end. Those are also some things to consider because number one, you can either, it's important to save for retirement, but also you can either pay the money to the government or you can pay the money into your retirement fund. So definitely also want to consider that. Depending on your structure, an HRA or health reimbursement arrangement is something that I've been, looking into recently. It's more beneficial for LLCs and sole proprietors, Schedule C type businesses, but it is a way that potentially you could have your out-of-pocket medical costs in addition to your premiums reimbursed from your company and treated as a business expense if it's done properly, and it would not be considered income to you. Income to the employee that is being reimbursed to. So a lot of, year-end nicks and knacks that could be implemented or things that could be put in place for the beginning of 2021, some of which need to be done now, some of which the deadline is March of 2021. So definitely check out the article, read some details about year-end planning strategies, and if we could be of assistance to you, feel free to reach out. If you haven't tracked your business all year due to COVID and a lot going on, understandable, but now's the time to get things in place so you're not caught off guard come tax season 2021. Also, last thing I want to throw in is the PPP. I had mentioned it in an article briefly the other day, and we don't know what's going to change as far as the deductibility of those expenses paid with a forgiven loan. So another decision to really strongly consider is preparing to pay extra taxes for those expenses that won't be deductible if it's not overturned, or decision of applying for forgiveness or not. Those are things that really need to be decided right around this time or beginning of 2021. So feel free to reach out if you'd like to discuss in any more detail. If you want to set up a consult, we are here for you, and enjoy your holiday season. Take care. Bye-bye.